Successful trading is an exercise in separating meaningful price expansion from random market noise. Fixed point stops are arbitrary and ignore current market conditions. At TradeCraft, we teach you to anchor your risk to the volatility factor, or VF, a statistical measurement of expected noise for the current session. By utilizing the VF, you ensure your stops are placed outside the range of normal fluctuation, providing the trade necessary room to breathe while maintaining a rigid, data-driven risk profile. We are now roughly 5 minutes before the market opens. I just want to note that I have added that key information up to the chart, just drawing some text on the chart. This is certainly not something that you need to do. It's just habit for me to every morning have that visible on the chart so I know what to expect. This is, again, something that can be put on every chart just by going to all charts when you double click on it. And then as I move this over, you should see that it is, I don't know why it's, see, now it's on that probe and rotation chart as well. So something that you can add or not add, it doesn't matter. I just like to have it on my 30-minute chart. And the one thing that I forgot to do while we were doing the pre-market is to come in and put in our automated trading strategy. So in ChartTrader, which you can open and close up here, what I'm going to do is create a basic ATM strategy. Now, because our VF is worth less than $50, so if you remember, each contract is worth 37. The very basic metrics that I want you starting with are if it is worth $50 or more, you are only trading one contract. If it is worth less than $50, you are trading two contracts. It's just a very basic starting point for everyone. So very simple way. So on this particular day, the MES was over $50, so trading singles on that, but two on this. So we're going to set up a very basic strategy. I'm just going to stop this so that it doesn't start before we get this done. So I'm going to go to edit, and you can see that I have a different stop loss in here because the next day was 66, not 74. So it is something that changes every day. But I'm basically going to create a automated trading strategy that executes two contracts when I put in an order, and then it's the number of ticks away. So ticks and points in the YM are the same. So the first contract is going to have a stop loss of 74. And then just to keep this very simple, I'm just going to throw an order out there for the target at 2 to 1. That does not mean that's where the target is going to go. But if I say 74 times 2 is 148, I'm going to change the profit over here to 148. And then I'm going to do the same thing on the second one. I need a 74 point stop because that's what my VF is. And this one, I'm just going to make 3 to 1. So again, there's just an order out there. So 222. Okay, and so what I have done now is I've said every single trade that I put on is, unless I make any change to it, is going to go out with two contracts with a 74 tick stop, and it's going to put out two targets somewhere for me to be able to move them around to logical places. The next thing I need to do is set up what's called an auto break even. So under stop strategy, I'm going to click on this, and again, this was set up for 66, so I'm going to change this to 74 on both of these, and I'll explain what that means. So 74. And so what I'm saying is that when the market moves 74 ticks away, one VF away from my entry, it's going to bring my stop to break even automatically. It's just going to help me simplify all of the management. So every trade is worth one VF in stop. And once we move one VF in gain, now we can start managing the trade. So it's giving the trade room to work. All of this is in the setup area for the software as well. So you don't need to spend too much time on this here today. If you'd like to save this as a template, you can. I usually save mine every day. Because this is from 2 days ago and not yesterday, that's why it's just a little bit different, but I'll save it. And so I have an MIM and an MES strategy, and I'll click OK. Now I am ready to trade. Everything is on the chart. I know what my strategy is. The market is just about to open. We've got about 4 minutes to go, and we'll just play this back, and I'll do my best to edit it for time. Okay, with about 1.5 minutes left to go before this cash session opens, and I want to reiterate, this is all on replay. This is not real. If you want to watch the real trading session, you can watch the real trading session. It's in the bonus material section, one of the very last lessons in the training. Let's reiterate our strategy for the day. We determined that we were trading inside the offer zone, which means we should be sellers. The only thing we should be looking for is shorts. We are now just below the offer zone, and the market is about to open, so we'll see what happens. if we are looking for a short, our objective is to be able to trade it all the way across the range and down to the bid zone and potentially further than that, as we now have a range projection that's down below that. So we'll certainly try to manage that trade as best we can once below it. But our objective would be to try and get short as we are up against the offer zone. Now, on top of that, we noticed that earlier in the morning, we had traded across the zones and pulled back and found support at the VWAP. This could be a trampoline moment where there was an expansion, price was quickly brought back down to average, and then buyers started buying into this, which is why we now see this uptrend. So we have some conflicting information. We want to be sellers, but we also have to be very aware that this could be a continuation because of the price action that we already see and how we've already come off of this. So we want to be very, very clear. There's the open. We want to be very clear that we have a selling opportunity from the zone and not just sell it just because there's other things on the chart that are telling us we may very well trade up and through it. Now, there's a very rapid action on the open. And what did we do? Once again, we came back to the VWAP, right? So we came right back to it, and now we've traded back up through this. So every morning at the open, you're going to see a lot of activity very quickly. The best thing that you can do, unless it's extraordinarily clear what you should be trading, is to just give the market a couple of minutes to work that noise out. And what that also does is tells us a little bit about how accurate our volatility factor is for the day. So just as an example, we have currently traded from 806 down to 720. Well, how far is that? Well, if we want to be fancy about it, we can grab a little ruler tool and mark this off. And so that is about 86 points. Well, actually from the open, it's probably more like here. But that tells us that our metric for noise is pretty accurate for today. It's just a very simple way of looking at it and saying, okay, well, we've come off the VWAP. Are we really going to see this expansion? So we're in the offer zone. We know we're looking for something to sell. But right now, we're trading up at the top of the second standard deviation, potentially breaking out of that, which might tell us that we're actually going to see this continue higher. So what we want to see is evidence before we're selling anything here. It doesn't make any sense for us to sell anything. We've come right off of the VWAP. We're now expanding higher. There's nothing that we can do. It looks like a great uptrend, but we're in the offer zone. We cannot sell this. We cannot buy this because we are in the offer zone. So we either need to penetrate through, which gives us some metrics for our upside. We know what, if we get through it, where our potential targets are. 191 is the average we expect. So does it make sense that even if we have to wait to get through this, that there's still range to capture? Yes, absolutely. We know that because when we were looking at it this morning here, we saw that only 27% of the range was there, 393 to go. We know it's going to cost us 74 points to find out. So there's still upside opportunity. But now it appears that we've found a high. And so we're going to look and see if this will roll over and give us an opportunity to actually see a downtrend begin in the offer zone. It's that simple. Here is our downtrend beginning. We can see that I'm going to pull this over just a little bit. We can see that we're breaking below the statistical level of SD1, standard deviation 1. So this is telling us this is an opportunity for us to potentially short this. Okay, and we are now only 3-4 minutes into the market, into the cash session. Get this expanded back out. And with that new high, we've now drawn our first projection to the downside pretty damn close to the bid zone. So the structure is starting to make a lot of sense. So we can certainly jump into this right here if we want to, but what you're going to find in the lessons is that almost every trade to enter a new position is going to come from one of the standard deviation lines. It doesn't have to. You can trade from here. You can trade from here. You can put in a market order. It doesn't matter. The math is designed to give us flexibility so that we do not need to be perfect. So in the lessons, I'm trying my best to be perfect. And you will see sometimes I am not perfect and sometimes things go wrong. But now that we're moving away from this standard deviation, it makes sense that I can drop an order in there. We have the downtrend trend zone starting to match up with that. And so I'm just right there at the standard deviation level. I've got a swing VWAP back behind that to protect me. I've got the trend zone back behind that to protect me. I've got SD2 to protect me. So what you will see in the live trading is almost this exact identical trade. I don't know that it's the exact price. I could be a couple of ticks above or a couple of ticks below, but it's the exact same trade. And what I've done is I've eliminated that fear of this being an expansion up through the offer zone, and I've allowed my strategy to come together exactly how I want it. So I now have evidence of a downtrend starting from the upper standard deviations. I also have the offer zone that we are in, which I know means I want to be a seller and avoid going long. It's that simple. I know what my strategy is. Now I just have to have it come together, and we'll see if we can get an execution here. I have well, that's very much a replay fill right there. That was to the tick, but it traded through it anyway. So, so you can see my automated stop is out here for 2 contracts. This is going to come to break even once we move 74 points in the right direction, meaning we'll have to trade through VWAP in order to do that. So some days that will make sense and some days it will not make sense. Today, we have already come off of VWAP twice. So VWAP has been tested. So this is something you will see in the lessons. There will be days when VWAP has not been tested, and we do not, usually we're only looking to buy it if it's a first touch of it. But in this case, we've already tested it twice. We see the downtrend. We have our strategy. Now we're just going to let this work. And we've got a stop that's a nice, good ways away. And we're going to let the market volatility dictate what that is, which is 74 points. We've got to be willing to let it go. I want you to think about this. If we get stopped out, we are very likely taking out the offer zone, meaning we will then want to get long and start trading towards some of these higher targets. So it's that simple. We start the morning with a strategy. We execute on that strategy. And if it doesn't work out, we have an opposing strategy. In the pre-market, we talked about if the offer zone breaks, we'll look to get long. But if the offer zone holds, we want to be sellers down to the opposite end of the range. Targets. While we're sitting here, we might as well deal with targets. So as I said, those are generic targets that have gone out, so you can see where they fall. We're going to try and have a strategy where anytime we trade from SD1, we're trying to at least carry across the other standard deviations. So from 1 to -2 would be an acceptable trade. If we traded from SD2 short, we would be looking for 1. That's just initial guidance, okay? Because we have a larger target, which is down below. So we know that hopefully we're going to trade all the way down to this range projection. The problem is that range projection has a wall in front of it, which is called the bid zone. So on this particular trading day, there was some extra information on the chart, which I'm not going to bring up right now, but I just simply used the front edge of the bid zone as my second target. I'm just trying to get the orders out there somewhere logical. I want them to be at statistical levels, not a made up risk to reward RR calculation where I'm hopeful that that's what I can get because I've made a spreadsheet that tells me that's how much I should be making so that I can add more contracts, and doesn't matter. That's completely illogical thinking. We want to have statistical levels in the market, not made up RR levels. It's nice when they come out as good multiples for us, but that is not our concern. Our concern is making sure that we've got orders in places where it makes sense. So the execution was made here at the standard deviation following a trend zone down because we were in the offer zone. The market then traded back up through it and made a double top, which is even more evidence that this is probably trading back down. So if I didn't take this trade, I'd be looking to short it right now. That would make perfect sense too, because now the downtrend zone has started again. We're up against the SD1 again, and now we have a double top showing us the same situation. The important thing for you to remember, and it's reiterated in almost every lesson, is that once we make the decision to take a trade or add on to a position, there is no fidgeting with it. We've made a decision based on statistical levels in the market with machine learning statistical data telling us how much noise there should be in the market. So even though this is going against me, I have no choice but to just let this work. I have made the decision to put on the trade, to put on the risk based on what I saw. There is no reason for me to change that. So let the trades work. We know if this one fails, we have the opportunity to go long. All right, this is now approaching VWAP, and we know we're going to have to trade through it, but specifically we know we've got to trade from 798 down 74 points, which would be 724. And at that point, the stop should move to break even, and I have the opportunity to add on to it. Now, I'm only going to add singles, so I'm going to go up and change that order quantity to 1. It's going to use the exact same strategy. And I also want to go down and I want to just check where my target is, because now SD -2 has moved away from it a little bit. So I'm just going to move that order up a little bit as well. And you can see we're now breaking through the VWAP. And my objective is going to be to add on to this position as soon as I can. I want to build up full inventory, which is what you're going to see every day in the training. Looks like this is going to come together a little bit different than the actual trading video. I must have had a different entry here, a little bit higher. But that's perfectly fine. But this has not come to break even, so there's nothing I can do to add. In the actual trading video, this brought my trade to break even, my stop to break even, and I was trying to add on to it here at the little band outside of the VWAP. I'm not going to do that because it hasn't been justified with where my position is. So this is why I want you to understand: you do not need to be perfect. You're not seeking perfection. You don't need to have the same trades that somebody else has. You need to have logic behind your trades. So in the live trading example, I added onto the position here, but I'm unable to do that because we have not gone 1 VF from my original entry. So until that happens, there's nothing I can do. Okay, so now you can see it has come to break even. So now I have the opportunity to add on to this. So I'm going to use my trend zone as my adding area. So what I'm looking for is for this to pull back up and find some resistance at the trend zone. I also want to double check that other order down below. You can see that it's off just a little bit. And I'm just going to continue to move this new order. And keep in mind, this is not the same. The other one I had a trade up here. This one it didn't qualify for that. So my stop was just, my entry was just a little bit different. So now my stop is up here at break even. Obviously, most of the time I'm going to be improving that stop, and you'll see in the training that we just use the trend zones in order to do that. But because I know I'm trying to put on an ad, I'm just going to leave it there for the sake of simplicity. This is one of those playback situations where we already know what happens, but realistically you would be adjusting the stop, moving it down along the way. All right, so we're getting down near my target down there. So we'll see if this will come back up and fill this. And again, not the same trade as in the live trading, but still completely applicable. If this is how I entered the first time, this is exactly what I would be doing. Okay, and I can see the other target is off a little bit too, so I'm going to move this one down. We'll just give it a little room to work. Okay, so now I have been filled on my new position, my add to this, and so I need to give that trade 1 VF of room to work as well. So my automated stop went out, so I'm just going to combine these together, and now that one needs to allow 1 VF of gain before we will make any further moves. So in the lessons, you're going to see this day after day after day, just trying to talk you through the process. We're now looking for this new position to move 74 points in our direction. Oh, and if you look over here, we now have a new target because we now have 3 positions out there. So I'm going to take this one and I'm going to go down to our range projection, because while it may very well stop at the bid zone, and that's where we would expect it to stop, our hope is that we trade through it, not just through that, but all the way down to bigger targets. So we're going to be constantly working our targets out further and further with the hope that we can reach them. We're going to be taking a little bit of profit along the way at strategic levels. The reason for that is because we will also, our intent will be to be adding back onto the position after we take some profit. It's a strategy, smart ad strategy, that is meant to help you with little tricks that the prop firms will employ by saying you have a trailing drawdown because the market moved this far. It's not really something that is that prevalent anymore, but you will find it. And so it's something that we wanted to account for by consistently taking profit and then putting on a new position, being able to reset our stops. You'll see a lot of that in the training. And we're getting down near our target. So let's just double check that we're in the right place. Looks like we're good. Let that work itself out. All right, so there is our first target, and still waiting for the break-even move on this. So we now have on 2. We would like to put on another one. There is our break-even. So now we are free to add again. We're going to combine our stops where that last entry was, and we're free to add another contract if we can find an opportunity. And as we are starting to break below SD2 and we have a long way down to the bid zone, I would like to put on another position that will give me a target even further out at the expected range rather than the first range projection. All right, you can see that we're breaking below SD2 and we have the trend zone starting to line up with that. So this is as good a place as any to put on our add, and we'll just follow this line as it moves down. And you can see we've also now taken out the previous low from the day. And so again, there's no need to be perfect on these entries. You can have them right at the SD line. You can have it on the trend zone. Really doesn't make any difference. When we're adding, we're not as near as particular. Now we can see that the new stop from that fill is here. So we're going to combine all of these, and now we're back up to 3 contracts or full inventory. And that kicked out another new target. So we're going to take that target and we're going to move it down to the next range projection. And that is our process. We're going to continue taking profit and adding to it, taking profit and adding to it. And you'll note that as we get close to the bid zone, we're going to stop trying to add because this is where we expect buyers to come in. All right, you can see we're just about down to our second target down here at the bid zone, on the edge of the bid zone. And we have not been able to improve this stop because of where we got into the last add here. We have not gone 1 VF yet. So our stop is still up where it is. There's really nothing for us to do but wait this out. Hopefully we will come down, get our break-even move, pick up our target, and continue on through the bid zone. Okay, we just got the 1 VF move, which allows us to bring our full position to break even. We also have a target just down below, but we have a few other things going on that you'll certainly learn more about in training. But you can't see it, but our bid zone is right here where this target is. So because we're up against a bid zone, there's no way that we can be selling any more into this. So we would need to trade through the bid zone, through our target, and then we could resume selling into this. So the beauty of that is that if that gets filled, now we only have 2, but now because we're not going to be adding anything else, we're free to just manage this. So normally we would start management with 3 contracts, but we were trying to get that last one to break even. And so what we're going to do is allow the trend zone to start developing, and we'll just use that as our management for the rest of the position. In this case, we know what the outcome is because this is replay and we've already actually traded this day. But this would be the process no matter what. We understand that we are in the bid zone, we're in the target buying area, but there's an opportunity that we could trade through it. So we want to try and manage through that and just maximize the position. So we're just going to let this develop a little bit, and then I'll start moving the stop, and we'll use that as our management. All right, and now that we have a downtrend that has started and has a couple of levels, we will begin managing the trade just always staying one trend zone block behind. And one more move allows another management step. And in this case, we know the outcome of this trade eventually comes up and takes us out of this, but it is from the bid zone, and our expectation would be that that should be where it holds. So if you weren't interested in trying to carry this down another 100 points or almost 200, then it would make sense if you just wanted to exit the trade here. That's perfectly reasonable. But our objective is we know we're expecting a larger range than what we have. So we would like to try and carry this through the bid zone and just manage it down to the next target and the target after that. Unfortunately, in this case, it doesn't happen. Our range projection is not met, but that's part of it. It gives us enough structure in the morning to come up with a trading plan that allows us to trade without any anxiety. It's very calm, very clear, very low risk. And I think at most today we've had $70-something worth of risk on the table. It's a fantastic way to trade a small account, be sized properly to be able to take advantage of these markets with very small accounts, whether that's your own personal account or a prop firm account. Okay, and that is TradeCraft. You might be scoffing at the $270 profit on this trade, thinking, how can I make money trading such small size? Well, that is truly the foundation of what we do here. Stay small and scale horizontally, not vertically. Trading 3 micros means I'm never at risk of blowing up an account. The most money we had at risk in this trade was $74. We stayed small and kept a clear head. Not anxiety, no panic trading, no revenge trading. It's far more important to learn how to do this with long-term objectives than to try to capture massive payouts. I believe the original live trade from this day made $284. That was multiplied across 5 prop accounts with a trade copier. The total gain for this low-risk trade was over $1,400. That's TradeCraft. I hope you've enjoyed this introduction. I think it'll be very helpful when you start the lesson process to have a little bit of insight into what it is that you're watching so that the lessons start to make more sense. We're not looking for perfection, and that's the most important thing for you to understand. It takes a lot of anxiety out of trading. You can see that on this day, we were not perfect. We didn't get the range projection exactly accurate, but we were able to capture more or less 70% of the range. That's what we're looking for, a data-driven approach to trading, properly position sized to allow us to fit into the risk profile of what it takes to beat a prop firm.